All right, let's talk about one of the most classic plays in a trader's book, the break and retest strategy. We're going to break down this blueprint step by step to see how it can help you make sense of the markets.
You know the feeling, right? You see a price just explode through a key level, and that FOMO, that fear of missing out, just kicks right in. But if you jump in blind, you can get burned. This strategy, well, it's all about giving you a smarter answer to that exact question. When is the right time?
Okay, so before we can actually use the strategy, we've got to get the basics down. It all starts with two concepts that are pretty much the foundation of technical trading: support and resistance. First up, we've got support. Think of this as a price floor. It's a level where buyers have shown up in the past and said, nope, not going any lower. It's like a safety net that catches the price when it's falling.
And on the flip side, you've got resistance. This is the ceiling. It's a price level where sellers tend to show up and put a lid on any rally. The price hits this level and really struggles to push higher.
So the easiest way to picture this is a room. Support is the floor you're standing on, and resistance is the ceiling right above you. A lot of the time, the price just bounces around between these two. That is, until it breaks out.
And that's where the retest comes in. This is the magic moment. After the price smashes through that ceiling, it has this funny habit of coming back down to see if that old ceiling will now hold as a new floor. This test, that is the confirmation we're waiting for.
Okay, so that's the theory. But how do we turn this into an actual repeatable plan? Let's get into the action plan and walk through the 5 steps you'll take. It's actually a pretty logical flow. First, you do your homework and find that floor and ceiling, your support and resistance. Then, you patiently watch for the breakout. But, and this is the most important part, you don't chase it. You wait for the price to come back for that retest. Once you get a clear sign that the level is holding, maybe you see a certain candlestick pattern, that's your green light. That's when you enter the trade.
Now here's a pro tip for telling a real breakout from a fake one. Check the volume. A legit, powerful breakout is almost always backed by a big spike in trading volume. It tells you there's real money and conviction behind that move, not just a bunch of noise.
And this really is the heart of it all. The name of the game is patience. Yeah, the breakout is exciting, it gets your attention, but it's the retest that gives you confidence. It's like the market is tapping you on the shoulder and saying, hey, yeah, this move is for real.
So how do we get even more confident? How can we stack the odds in our favor and try to filter out those false signals? Well, this is where you bring in the rest of your toolkit.
You see, you never want to rely on just one thing. You can layer on other tools to build a stronger case for your trade. You could look at momentum indicators like the RSI or MACD, check a higher time frame to see the bigger trend, or even see if there's a major news story that supports the move.
Fibonacci levels are a huge help here. Sometimes, the price doesn't pull back perfectly to the old breakout line. Instead, it might pull back to one of these key fib levels. So you want to watch these zones closely, because they can be great spots for an entry.
And this is why we look at multiple time frames. Think of it like this. If you see a great setup on your short-term chart, that's good. But if you zoom out to a longer-term chart and it's telling you the exact same story, well, now you've got something much, much stronger.
All right, let's be real for a second. There is no such thing as a perfect trading strategy that works every single time. So it's absolutely crucial that we understand both the pros and the cons of this approach. Time for a little reality check.
So, on one hand, the strategy is fantastic because it gives you that extra layer of confirmation and some really clear risk management points. But on the other hand, it's not invincible. You'll absolutely run into false signals, and it just doesn't work that well in certain types of markets. Let's break it down. The big win here is that built-in confirmation. It's a huge confidence booster. Plus, you know exactly where to put your stop loss, right below that retest level. But here's the catch. Those false breakouts can be brutal. They're designed to trap traders. And in a choppy, sideways market, this strategy can get you into a lot of trouble. And sometimes, you just don't get that perfect clean retest you are waiting for.
Okay, we've gone through the mechanics, the tools, and the good and the bad. So what's the bottom line? What are the absolute core ideas you need to walk away with? Let's boil it all down.
So here it is. First, remember this is a structured plan, not a get-rich-quick scheme. Second, that retest is everything. It is your confirmation signal. Third, it's super versatile, which is great. Fourth, and this is a big one, your risk management has to be locked down. And finally, you have to accept that sometimes the price will break out and just keep going. It won't always give you that second chance.
And really, this is what it all comes down to. Look, anyone can learn the steps on a chart. The strategy gives you the map.
But the real question is, do you have the discipline to actually follow it? To have the patience to wait for your setup, to manage your risk when you're in a trade, and to accept the results, win or lose? That, right there, is what turns a strategy on a screen into a successful trader.